We'll hit Apple. It's one of the big highlights of next week's earnings calendar. Our next guest says this could be a tale of two halves for the 2023 Apple stock. Let's bring in Wamsi Mohan, Bank of America senior analyst, has a neutral rating on Apple, $153 price target. Explain the tale of two halves, Wamsi.
Yeah, thanks for having me, Sarah. So the way we look at it is really the first half has got a lot of headwinds, and these headwinds have really got to do with some of the seasonal dynamics that are at play, weak consumer demand globally, and the fact that you're entering a phase of a really weak iPhone cycle. When you look at the 14 and 14 Plus, they have been very weak from a demand standpoint, right? We do publish in our note our proprietary tracking of availability of these phones across Apple stores globally, and when you look at that, the 14 and 14 Plus have been just widely available all throughout, whereas the availability of the Pro models was kind of muted given the supply issues that we've heard out of China, and then they've recovered since then. But it's not that there was a huge amount of pent-up demand that, again, made the availability go low. The availability has been very steady. So it tells us that the demand outlook in the near term is kind of challenging, a little bit weak. As you go into the second half, there is more momentum in the story just because you hop onto a new iPhone cycle, hopefully with better expectations. There is the launch of the augmented and virtual reality or mixed reality headset potentially coming. And so there are some external product catalysts. And then the services growth itself, too, which is kind of challenged in the first half still because of advertising and gaming weakness starts to accelerate in the second half.
And I feel like the other big wild card here, Wamsi, for I don't know when this falls, is the China reopening story and how that plays out and when that starts to boost Apple, right, from production and a demand perspective.
Yeah, Sarah, so that's a good point. Look, I mean, from a production perspective, our checks are suggesting that production is already back to normal in China. The China reopening as a demand catalyst, it has been on the margin a bit positive, but the 14 and 14 Plus, which make up roughly 50% of the portfolio, the reception of those products in China has been very timid. So the problem that we see is that China demand in fiscal 23 is still going to be down on a year-on-year basis for all of Apple, right? When you think about sort of not just the phones where 50% of the portfolio has got sort of weak demand, but then you're also comping the iPad comps from a COVID era that we think is going to go back to pre-COVID levels as you're seeing in PCs. So some other pieces of the portfolio that benefited during the pandemic in areas including China are going to be very tough to overcome. So we're not huge believers that the China reopening is going to be this massive tailwind for Apple.
Wamsi, thank you very much for joining me. Appreciate it.